Hello friends, welcome to Wealth Guru, and here I am back again with another exciting video today. And the stock recommendation for today would be on Lemon Tree, and we'll be discussing the stock recommended by 5 Paisa and finding out if it's worth your time and money for the investment. So before you go into the details, so if you're new to the channel, do not forget to subscribe to the channel because I bring in such videos almost every day. Now let's dive into this stock which has been recommended by 5 Paisa, as I just said. So the stock has been recommended based on a technical indicator, and the technical indicator indicates that there has been consolidation pattern for the last 30 weeks, and on July 6th the stock has given a breakout from the current levels, and it has bounced back from its 21-day moving average. So which indicates you can buy the stock in a range of 43.4 to 44.25 for a target of close to 49, which is almost 12% up from here, and the stop loss you can put it 41. But before we go into the details regarding whether you should buy or not, let's do some fundamental analysis and find out whether it's worth the investment at this point of time. So let's go into the Yahoo portal and let me show you whether it makes sense at the current level. So as you can see, this has been a long-term stock pattern. So it reached almost 90 levels in 2019, but after that it went down to the level of close to 15 way back in April 2020, and from that level moved up to almost 43 now. So, and there has been no dividend history on this stock, so it has never paid a dividend. And if you look at the overall stock overview, so you see the market cap is close to 3,470 crores. The P for the 12 months trailing is minus 23, which makes sense because most of the hotel industry has been going through a rough patch right now, so this really makes sense. Price to book is 2.2, and the operating profit margin is 30%, and dividend for the 1 year is 0%. So this is the 1 year chart. So it has moved from almost 20 levels to close to 40 plus, so doubled in a year. Even though the stock fundamentals hasn't changed much, or the shadow on the hotel industry overall has been there for almost more than a year now. So let's do a SWOT analysis to find out whether it makes sense to buy the stock now, and what the strength, weaknesses, opportunity and threat looks like. So here we are on the strengths. So as you can see, we have 6 strengths, 7 weaknesses, 2 opportunities. So looking at the strengths first, there is growth in net profit with increasing profit margin quarter on quarter. There is increasing revenue every quarter for the past 3 quarters. There is increasing profit every quarter for the past 3 quarters. So all these things are improving. The book value per share also has improved for last 2 years. FIA and FPI are also increasing their shareholding, and there is strong momentum which indicates price above short, medium and long term moving averages. So all these are looking strong, but let's go into the weaknesses and find out what the biggest weaknesses are. So in terms of weaknesses, mutual funds decreased their shareholding last quarter. There is degrowth in the revenue and profit for some time. The companies has high debt, like most of the hotel industry companies. The company debt is also increasing as there is a lot of pressure from like operating like expense perspective. They have to take a lot of debt to manage the operating expense, so that's why the debt is also increasing. The low petty risk score, companies with weak financials, and the declining net cash flow. So company is not able to generate net cash, which is understandable in terms of what's happening in the hotel industry now. And the annual net profit is declining also for the last 2 years. So that's pretty much on the weaknesses. So as you see, there's a lot of weaknesses in the stock compared to the strengths. So that is definitely a matter of concern right now. And if you look at the opportunities, the P is less than 10, which is in fact not right because the P is in the negative. So this is really not an opportunity. So because this is also a weakness because P is in the negative, not in a positive territory. So that's not correct. And RSI indicating price strength, this is also not that significant opportunity. And if you look at threat, there is no threats as such, but overall the bigger concern is when exactly people would be going out to use hotels and all, and when things are going to improve. That is going to play a part on the overall industry and on Lemon Tree in specific. And let's see what is the stock shareholding looks like. So if you look at the shareholding, the mutual funds almost 25%, FIA is almost 25%, promoters hold close to 30%, and public hold almost 35% or so. This is just a rough breakup. And if you look at the mutual fund holding, almost has been constant for last 5 or 6 quarters. However, the FIH holding has increased a bit in last 4 quarters. So that's pretty much is the overall shareholding pattern that looks like right now. But overall, as I said, there has been a lot of companies in other segments which can give attractive valuations and has potential going forward. But if you are a purely technical player, then go for it, ride the momentum, sell the stock at 10% profit or so. But if you are a fundamental analyst, or if you are invest on fundamentals, then avoid this stock at this point of time. So that's pretty much my recommendation right now. And if you like the video, do not forget to give a thumbs up, and if you like the channel, don't forget to subscribe the channel.
Bye bye guys.
Thanks a lot.
Thanks a lot.